Good day and welcome to Q1 FY27 earnings conference call of Venus Pipes and Tubes Limited, hosted by Nuvama. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on the date of this call. These statements do not guarantee the future performance of the company and may involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Neha Talreja from Nuvama. Thank you, and over to you, ma'am.
Thank you so much. Good afternoon, everyone. On behalf of Nuvama, I welcome you all to Q1 FY27 earnings conference call of Venus Pipes and Tubes Limited. We are pleased to have with us management team of Venus Pipes, represented by Mr. Arun Kothari, MD, Mr. Dhruv Patel, Whole-Time Director, and Mr. Kunal Bubna, CFO. We will have our opening remarks from the management, followed by the Q&A. Thank you, sir, and over to you, Arun, sir.
Good afternoon and warm welcome to everyone on the Q1 FY27 earnings call of Venus Pipes and Tubes Limited. I am joined by Mr. Dhruv Patel, our Director, Mr. Kunal Bubna, our CFO, and SGA, our Investor Relations Advisor. We have uploaded our Q1 FY27 presentation on the stock exchanges and in the company's website, and I hope you have had an opportunity to go through the same. I will begin with the brief overview of the operational environment, followed by an update on our business and capacity expansion initiative, and then discuss our performance across domestic and export markets. The global operating environment continues to remain uncertain, with geopolitical development, supply chain disruption, and volatility in commodity prices impacting business across markets. At the same time, the medium to long-term outlook for the manufacturing and infrastructure remains encouraging. India continues to stand out as one of the key growth economies globally, supported by healthy domestic demand, infrastructure investment, manufacturing expansion, and increasing localization across industries. The continued shift towards India as a manufacturing and sourcing destination is also creating opportunities for Indian engineering and industrial product manufacturers. For the stainless steel industry, we see structural growth opportunities across sectors such as oil and gas, chemical, petrochemical, power, pharmaceutical, and other process industry. The new demands is also coming from the data center. We believe these trends provide a strong foundation for the industry's growth over the coming years. Coming to Venus, we are building our next phase of growth. We remain focused on building a comprehensive stainless steel engineering platform, combining scale, product breadth, quality, and global reach. Our objective is to establish Venus as the first reference and preference for stainless steel engineering solutions. Over the last few years, we have consistently invested ahead of demand to strengthen our capacity and our product portfolio. We are now entering an important phase where these investments are beginning to translate into new growth opportunities. Now I will hand over to Mr. Dhruv Patel for updates on the quarter.
Thank you, Arunji. Speaking of the quarter gone by, we continue to see healthy demand across our key end user industries. A key development, as announced on our last call, has been the commencement of our fittings and value-added seamless and welded pipes and tubes capacities in May. We have started receiving encouraging response from our customers for these products. As with any new product category, customer approval and certifications are an important part of the process, and we are working closely with customers across industries to complete these requirements. We expect penetration to improve progressively as these approvals come through and customers start scaling up their orders. We took another important step towards forward integration by entering into pipes pool business. with a plant capex of around 70 crores backed by LOI from client in data center segment. As announced in the previous quarter, the project is progressing well, and we remain on track to commence the spooling facility by end of this year. Venus has been among the early players in the stainless steel pipes and tubes industry to pursue forward integration into fittings and now spooling. These initiatives are an important part of our strategy to progressively build a one-stop piping solution for our clients. By expanding our product basket, we will be able to address a large share of our customers' requirement, enter higher value applications, and deepen our relationship with clients. We also expect this to improve our product mix over time. Coming to our performance during the quarter, revenue growth was driven by a combination of volume growth and higher realization, with realization benefiting from the increase in steel prices. While higher steel prices supported reported revenues, our EBITDA per kg also improved. We also saw a higher growth in welded pipes and tubes during the quarter, while the contribution from seamless pipes and tubes also remained healthy. Going forward, our focus will remain on improving our product mix, increasing the contribution from value-added products, and driving operating efficiencies. As our newer capacities scale up, we expect these initiatives to support the quality of our earnings and margins. On the geographical performance, our domestic business continued to witness healthy demand across key end markets. We remain focused on sectors with strong structural demand for stainless steel pipes and tubes, including oil and gas, chemical, pharmaceutical, and engineering, while simultaneously increasing our presence in higher value applications. During Q1 of FY27, our domestic revenue stood at 227 crores, registering a robust 31% year-on-year growth. We remain confident about the domestic opportunity and will continue to deepen our presence across existing sectors while also penetrating into newer sectors such as data centers and solar, where our expanded product capabilities can create opportunities for growth. On the export side, we continue to see a healthy opportunity for Indian manufacturers as global customers increasingly look to diversify their sourcing base. Our presence across multiple geographies provide us with a diversified export platform, and we continue to work on expanding our customer base geographical reach. However, the prevailing geopolitical tensions have created some uncertainty in the export environment. Despite these external challenges, the healthy traction in international markets and secured strong export orders from our key export markets, particularly US during this quarter. Exports remained robust at 94 crores, contributing nearly 30% of our total revenue, reflecting the strength of our product portfolio and customer relations across global markets. Going forward, our focus will be on further diversifying our geographical presence, entering newer markets, and increasing the share of value-added products in our exports. Our investments in capacity, product range, and certifications will help us capture these opportunities over the medium term. Our order book for the quarter also stood strong at more than 600 crores without considering the LOI of 185 crores, with a strong mix of domestic and export reflecting strong demand for our products. Overall, we believe Venus is entering an important phase of its growth journey. The investments we have made across fittings, value-added seamless and welded pipes and tubes, and now spooling are expanding our product capabilities and opening up new ventures for growth. Our larger objective is to build Venus into a one-stop piping solution provider, an engineering solution provider with a broader product portfolio, deeper customer relationship, and growing presence across geographies. We remain focused on scaling these new businesses, improving our product mix, and continuing to grow faster than the industry, while creating sustainable long-term value for all our stakeholders. With that, I would like to hand over the call to Kunalji, our CFO, to take you through the financial performance of the company.
Good afternoon, everyone. We are pleased to share that Venus Pipes and Tubes has delivered a record performance in Q1 FY27, achieving our highest ever quarterly revenue and EBITDA. On revenue front, revenue from operations for Q1 FY27 stood at rupees 320.5 crore compared to rupees 276.4 crore in Q1 FY26, registering a 16% year-on-year growth. The revenue mix for the quarter comprised 55% from seamless pipe, 39% from welded, and 6% from others. Within the core business, seamless pipe revenue grew 15% year-on-year, while welded pipe revenue grew 21% year-on-year during the quarter. Export sales stood at rupees 94 crore compared to rupees 103 crore in Q1 FY26. Export was impacted by disruption arising from geopolitical situation. Despite this, export continued to contribute around 30% of our overall revenue, reflecting the strength and diversification of our internal business. Coming to EBITDA for the quarter stood at rupees 51.5 crore compared to rupees 44.9 crore in Q1 FY26, registering a 14.7 year-on-year growth. EBITDA margin stood at 16.1%, broadly stable compared to 16.2% in the corresponding quarter last year. PAT for Q1 FY27 stood at rupees 26.4 crore compared to rupees 24.8 crore in Q1 FY26, registering a 6.5% year-on-year growth. PAT margin for the quarter stood at 8.2%. Overall, we have started FY27 on a strong footing with healthy revenue growth and record quarterly EBITDA. The underlying demand environment remains encouraging, and our expanding product portfolio provides us with multiple avenues for growth. With this, I would like to open the floor for questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Shubhi Gupta from Trinetra Asset Managers. Please proceed.
Good afternoon, sir. So my first question is that what are the utilization levels? Also, are we maintaining the growth guidance for this year, which I believe was about 20%? So if you could just answer that first.
Yeah, the utilization level at welded is around something more than 60%, and for seamless is around 85-90%. And yeah, we are maintaining the guidance at similar level.
Okay, so one more thing, sir. During your remarks earlier, you mentioned that we'll be focusing on improving our product mix. So if you could just tell me what is the target product mix that we are aiming for? Is there a specific proportion that we are targeting?
Yeah, primarily on the side of welded, we started the last year only. We started with value-added tubing business. So that is the area we are focusing to increase their proportion. Secondly, the capex what we finished in the end of May 2026, wherein we added quality on the side of seamless tubing business. And apart from that, we also did fitting business in our armory. So we believe all this coming quarters to go, we should see the impact of this value-added product.
Okay, sir. Thank you.
Thank you. A request to all participants, please restrict your question to two per participant. For more questions, please rejoin the queue. The next question is from the line of Sneha Talreja from Nuvama Wealth. Please proceed, ma'am.
Thank you, team. Thanks a lot for the opportunity. Just two questions from my end. One is on the order book. Did I hear it correctly that you said your order book is 600 odd crores? So currently, which if I'm not wrong was around 450 last quarter.
Yes.
So where would this 150 crores of addition, which kind of sectors could you enhance that? Where is the incremental order book? Like 150 odd crores within a quarter is a huge number. Where is this incremental order book? Which sectors are contributing to this kind of a growth?
Primarily it's from power, engineering, chemical, and oil and gas.
Understood, sir. And secondly, on the fittings front, what sort of a response are we seeing in the market? Where is the share of fittings at this point of time? Some sense. And when do we see our margins inching up? I know you have a long-term guidance of again inching up to 18-19%, but when do we start seeing our journey, improving on a quarter-on-quarter basis? That's second and last question, sir.
So see, fitting definitely, as we are selling pipe to the end customer, so generally many of the expect the end customer will be same. So we are seeing encouraging response from the end customer. But as it is a very new business, so again the requisite approval and process are underway. So we believe from this second quarter onward, a few volume from the side of fitting should also come into the business. And again, from the perspective of EBITDA, see, we started at the time end of May the seamless and fitting business. So I think post second quarter, I believe we should see inching of margin.
Got that. Thanks a lot, team. All the best.
One more thing. Regarding order book, we are having an order book of the 600 crore in the sector of pipes and fitting sector. Apart from this, we are already having LOI of rupees 185 crore for our spooling project. So altogether, we are having order book of near about 800 crore.
That was quite helpful, sir. Thank you so much for that clarity.
Thank you. The next question is from the line of Dhruv Jain from Ambit Capital. Please proceed.
Hi team, thanks a lot for the opportunity. First question is on export and domestic mix. So while you alluded that you have a very strong order book across these two categories, in terms of FY27 mix, how should we think about it? Does this 30% eventually go to 40-45% at the end of the year, or any number that you want to share?
See, currently it should be more than 30%, but from the order perspective, what we in hand, we have more than 40 or around 45% from export.
Okay. And sir, last 6 or 7 quarters, we've seen that margins have been in the same 16% kind of zone. Now, with the spooling solutions and the fittings piece coming through, how should we think about FY27 margins and eventually FY28 margins? With the scaling up of fittings and spooling solutions also coming through. I understand the approval side of things that Dhruvji spoke about, but just wanted your sense there.
See, the intent is to take it to 18% in coming 2 years to go. But definitely for FY27, it should be less than 17% on an overall basis. Because see, third quarter is the quarter wherein we'll be starting majorly on the side of fitting and all. And again, data center will also come in third and fourth, and then it will be getting spill over in coming year to go. So those things will happen over a few more quarters. So then the margin from all the value added products will start contributing in the EBITDA.
Okay. And sir, if you could just call out what is the debt at the end of first quarter and what should be the capex number that you are looking at in this year? I'm guessing large part of your capex will be the number. Thanks.
Yeah. Primarily, net debt level it is around 250 to 280 odd crores. And what did you say the next?
Sir, capex.
Around 100 odd crores. We are targeting, and net debt is 325 odd crores. As in 30
this 100 crores would be used to increase which segments capacity?
See, primarily the total 100 crore, 70 crore will be spooling and few fittings and other machinery. 15 odd crore will be towards capex, maintenance capex and all, towards solar plant. So between 100 110 odd crores.
Okay, got it. Thanks a lot, sir.
Thank you. A request to all participants, please restrict your question to 2 questions per participant. For more questions, please rejoin the queue. The next question is from the line of Bharat Shah from BCS Capital Ideas. Please proceed.
नमस्कार अरुण जी. एक ब्रॉडर क्वेश्चन मैं पूछना चाहता था. If we see the composition of our business, we are in a specialty area, and generally our products have been at better end of the product portfolio profile. It is also evidencing good export performance, generally speaking, over the period of time. But despite customer adaptability, product portfolio, reasonable technology at work, and generally long-term favorable demand conditions, हम 5 साल में देखे तो मोटा मोटा टर्नओवर 3 गुना हुआ है, बट दैट्स फ्रॉम 400 टू more like 1150 odd or 3 times. प्रॉफिट भी मोटा मोटा वही बैंक में है, बट absolute size of the business and absolute size of profit still remain very insignificant. मतलब नेट प्रॉफिट 100 करोड़ का और कुछ 1250 करोड़ का टर्नओवर, इतनी सब मेहनत और मशक्कत के बाद somehow sounds a bit underwhelming.
Thanks, Bharat bhai, for your concern. So, Bharat bhai, just मैं थोड़ा business का just you must have idea about the stainless steel pipe industry. तो stainless steel pipe industry में especially क्या होता है? Approval and number of things required to penetrate in the market. Or we have did the capacity expansion from after the IPO in May 2022. We had did the almost 3 ton capacity expansion. So we had created our Venus presence in the market in very well way. Apart from the creating presence, we had expanded our product portfolio also, just like fitting, or we are now moving forward in the spooling solution where you will get the better margin since the in-house product of the pipes and fittings will be consumed in-house, or we will able to provide the customer complete engineering solution. So that's this in the coming quarters. For the after 1 or 2 quarters, definitely you will able to get the improvement in the bottom line in very significant way, since we are entering into the value-added product, or some of the product will be consumed in-house, which will give the value addition benefit. Or our focus from very beginning, our focus was to be the you can say ki early player in the every segment. We had started our journey simple as a fabrication of the pipe and ERW pipe. Then we did the backward integration for seamless pipe. Then we had entered into the fitting market. Now we are entering into the end-to-end solution for the customer. तो आपको 2-3 क्वार्टर बाद इसमें काफी इम्प्रूवमेंट देखने को मिलेगा टुवर्ड्स द मार्जिन साइड. और हमारा इन फ्यूचर जो लास्ट 3 साल में ग्रोथ की है इन द टॉप लाइन, वो ऑलमोस्ट हमने 30% की रन रेट से की है. नाउ आवर एंडेवर टू ग्रोथ एटलीस्ट मिनिमम 20% एंड टू इम्प्रूव द बॉटम लाइन और एज वेल एज द इम्प्रूव द बैलेंस शीट ऑफ द कंपनी.
Those points are valid. Our products are more value added. Constantly we have tried to move up the value chain. We have built businesses with international, some demanding customers. So obviously, quality of engineering at work, quality of the product, it passes all those tests. मैं कह रहा था कि इतनी मेहनत और इतने सब होने के बावजूद भी एब्सोल्यूट साइज ऑफ द बिजनेस अभी भी बहुत छोटा है. मतलब 1150 पौने 1200 करोड़ का टर्नओवर और मुश्किल से 100 करोड़ का नेट प्रॉफिट. डजंट इट साउंड लिटिल underwhelming compared to whatever strengths and probably opportunities in the markets are?
डेफिनेटली सर, हमारा पैशन है. दिस इज इंजीनियरिंग बिजनेस और दिस इज आवर पैशन ऑफ द ऑल द प्रमोटर. तो डेफिनेटली बिजनेस थोड़ा टाइम लगता है. वी आर वेरी यंग प्लेयर इन दिस सेगमेंट. तो अभी यंग प्लेयर तो वी हैड द लॉट ऑफ कैपेक्स इन लास्ट 4 years. So due to this capex and we have taken some of the working capital borrowing to run the company or to manage the working capital. तो इसके लिए थोड़ा सा बॉटम लाइन पे इफेक्ट कम आ रहा है. जैसे मैं आपको बोल रहा हूँ एज विल गो इनटू द मोर वैल्यूएडेड प्रोडक्ट. तो वैसे जैसे मार्जिन टुवर्ड 16 से आपको 80% 90% 2-3 क्वार्टर में देखने को मिलेगा. तो यू विल सी लॉट ऑफ इम्प्रूवमेंट इन दैट साइड एट द बॉटम लाइन ऑल्सो.
बट अगर कि हम देखें तो 5 साल में या इवन 10 साल में हमारी इंटरेस्ट कॉस्ट इज मच हायर देन आवर डिप्रिसिएशन चार्ज. यदि केपेक्स एंड केपेक्स इंटेंसिटी वर affecting the business performance, interest costs won't have been so high. Interest costs typically year after year, if you see, is 2 times the cost of depreciation charge. तो कहाँ ना कहाँ I hope you're getting my point, but
Yeah, definitely. हेलो भरत, जैसे मैंने बताया ना, जैसे मैंने आपको जो बताया कि जो टॉप लाइन ग्रोथ है उस पर भी हमारा फोकस, मैंने बताया 20% ग्रोथ का हमारा फोकस है, और अभी हमारा डायरेक्ट फोकस बॉटम लाइन ग्रोथ पे है। जैसे मार्जिन आपका 18% के आसपास जाएगा, 18-19% इन द नेक्स्ट 2 क्वार्टर, तो डेफिनेटली आपको बॉटम लाइन ग्रोथ दिखेगी और वर्किंग में बोरोइंग की भी इतनी जरूरत नहीं पड़ेगी।
ये स्पूलिंग वाला प्रोजेक्ट आपने देखा होगा, रत्नमणि के रिजल्ट्स अभी आए थे। The spooling business has done phenomenally well. Of course, the pipes business still had some challenges, but spooling business had a margin of almost 52%. I mean, it was staggering kind of a margin. So, do we think that our spooling activity will produce such a major difference like what we have seen for Ratnamani?
Bharat, just not a part of the Ratnamani. Ratnamani has doing this spooling business in the last 3 years. I will not comment much about that one, but definitely we are also foreseeing good margin in our spooling business, either better than the pipe business or fitting business. So in the coming quarters, once our spooling business will start, you will see result in 2 to 3 quarters.
स्पूलिंग कब शुरू हो जाएगा अरुण जी?
End of this Q3.
एंड कितनी बिग टर्नओवर एक्सपेक्ट कर सकते हैं?
मैं ऑलमोस्ट यू कैन से कि इस साल में तो FY27 में ऑलमोस्ट टॉप लाइन का 5% के आसपास एक्सपेक्ट कर रहा हूँ, और इन FY28 आई एम एक्सपेक्टिंग टॉप लाइन का ऑलमोस्ट 10 to 15%।
नेक्स्ट ईयर 10 to 15%।
हाँ, टॉप लाइन का।
अच्छा, एक लास्ट क्वेश्चन अरुण जी, अभी जो ओवरऑल स्थिति है एंड अवर बैकवर्ड इंटीग्रेशन अटेम्प्ट्स एंड डूइंग ऑल वैल्यू एड एफर्ट्स and given where the opportunity domestically which is robust, even exports I suppose should recover once this muddle hopefully is out of the way. आपके हिसाब से कितने साल में यहाँ से हम सोच सकते हैं कि हमारा बिजनेस दुगना होगा?
ऑलमोस्ट राइट नाउ वी आर इन द FY27 है, ऑलमोस्ट आई एम एक्सपेक्टिंग कि इन नेक्स्ट 3 years बाय FY29 और 30 इन बिटवीन कब भी यहाँ से बिजनेस डबल हो जाएगा, उससे पहले भी हो सकता है, बट राइट नाउ जो कंपनी की कैपेसिटी वगैरह हमने ग्रोथ की है और जो हमारा प्लान है, हमारा बिजनेस डबल से ज्यादा है कि हमारा फोकस अभी टूवर्ड्स मार्जिन तरफ ज्यादा है, तो दैट्स व्हाई अगर बिजनेस डबल होए नहीं होए, बट मार्जिन सेट में आपको काफी इंप्रूवमेंट देखने को मिलेगा इन नेक्स्ट 2 to 3 quarters। जैसे मैंने बताया कि इनहाउस मेरा जो पाइप्स वगैरह बन रहे हैं व्हाट्स आवर एम कि जो मैं पाइप्स वगैरह बनाता हूँ उसको ऑलमोस्ट इनहाउस ही कंज्यूम करूँ, इनहाउस जहाँ पे फिटिंग्स में, स्पूलिंग में, इन ऑल दिस बिजनेस एक्टिविटी, तो वहाँ पे यू विल गेट द बेटर वैल्यू एडिशन।
मतलब 12,500 करोड़ का जो लास्ट ईयर का टर्नओवर है, बाय FY29 और FY30 समवेयर इन बिटवीन करीब 2,500 करोड़ का होना चाहिए हमारा टर्न।
बिल्कुल बिल्कुल बिल्कुल।
एंड मार्जिन शुड बी at least 3-4% higher than where we are today.
Yeah, minimum we are targeting 3-4%, but on conservative you can assume that it will be minimum 18%.
जी, okay, thank you Arun ji.
Thank you. A request to all participants, please restrict your question to 2 questions per participant. For more questions, please rejoin the queue. The next question is from the line of Deepak from Sundaram MF. Please proceed.
Yeah, thank you for the opportunity. I'm audible?
Yeah. Yes, sir.
Yeah. Hi, Arunji. So, Arunji, I had a couple of questions. So, first, we have showcased a good order inflow this quarter for our closing order book to be around 600 crore. Just wanted to double click on that. Where are we seeing those new order inflows coming to us? Means, is it within the existing customer base, or is it that, we are added new customer in this quarter to drive such a high order inflow? I mean, it is more than what we reported in the last 4 quarters. So just curious to know, is it within the same customer that we are gaining wallet share, or we have added a few more customers this quarter?
Yeah.
And And most of this order inflow, is it related to domestic market or it includes a mix of both the domestic and exports?
It's a mix again, both domestic and export. The order inflow has been good from USA in this order book of 600 odd crores. And again, in the domestic also, the customer are mixed order from power, engineering, chemical, predominantly from power from the repeat customer also, and few from engineering, chemical from new customer also. There's a mixed bag.
Okay. And fittings, as you already highlighted, we are planning to commercialize this. So what kind of revenue are we expecting from the fitting division in FY27 and 28?
FY27 is expecting around 5 to 7% of the total top line, and coming to go, we are expecting around 10%. Something less between 8 to 10%.
Okay. And one last point. So just, sir highlighted that we are looking at a 20% growth, which almost signifies an 1,400 crore revenue for us. And, 5% of that is roughly 70 crore. And that is what was indicated, that we are anticipating, 70 crore worth of revenue from data center. But if I remember correctly, in the last call, you indicated that the order book execution of that 185 crore letter of intent is around, 15 months, which basically gives you an 37 sort of crore kind of revenue. And since we are executing only for a quarter, I'm just curious, where is this mismatch of 70 crore top line from data center versus what you indicated earlier, that it's going to commercialize only in Q4, which indicates that it would not be more than 40 crores.
See, what we have done, a lot of work on the side of plant perspective has been done on the data center. And the customer is quite curious to get it done at a faster pace. So we have pulled up many things for the data center, and we are quite hopeful. The significant portion, the entire capex may overlap to fourth quarter of Q4 FY27, but major portion we are targeting to finish before December 2026. So we believe the good amount of top lines will also be contributed from data center. And the execution period is basically, you can say, before December 2027. And again, we will try our level best to finish in targets.
Okay. Thank you.
Thank you. A request to all participants, please restrict your questions to 2 questions per participant. For more questions, please rejoin the queue. The next question is from the line of Dhiral Shah from Phillip Capital. Please proceed.
Good afternoon, sir. Thanks for the opportunity. Sir, this quarter we have seen the growth in the welded pipe segment is much higher than the seamless. If I look at your historical, the seamless have grown much better than the welded. So what has changed for us in the welded pipe segment particularly?
Oh, see, what has happened with us, the seamless was to a good extent utilized to the maximum, as we added the capacity by the fair end of May 2026. So the contribution for the increased capacity will be coming from the coming quarter to go. And again, we have been trying to increase welded, and we have been able to do that in this quarter on the side of welded.
But sir, any particular sector that has given us the growth on the welded?
No, it's a mixed sector again, not a specific one.
Okay, do you expect, sir, seamless pipe run rate to remain the same since we are running at a full utilization?
See, with the new capacity, the intent is to get it run at a full capacity. But again, it will not be in the immediate quarter. But each passing one quarter, we believe the capacity utilization should keep on increasing. And the intent is to take it the fullest going forward.
Okay. Thank you so much, sir.
Thank you. The next question is from the line of Rishi Kothari from CBA Asset Managers. Please proceed.
Yeah, am I audible?
Yes.
Yes, sir.
Yeah. Thank you so much for your my question is around welded and seamless bifurcation. So what sort of ratio for domestic revenue and export revenue for welded product and seamless product individually?
No, on the blended basis, we generally give it around 30%.
The blended business. You don't have bifurcation. You can't give bifurcation to welded and blended is 80/20, is it?
Yeah.
Blended is 80/20, is it?
Blended, if you take definitely the last quarter seamless was more.
Last quarter seamless was more. What about this quarter?
This quarter, matlab Q1 quarter.
Any numbers that you want to quote in terms of the percentage?
No, I don't.
Okay, but seamless was there more than welded.
Yes.
Okay. And then also on the, of course, one of the person asked on the new CapEx that we are having going to live for spooling. We are expecting in Q3 FY27 it will go live, correct?
Yes.
Okay. And what sort of demand are we looking at in that, sir?
In spooling?
Sorry?
For spooling, you said, no?
Yeah.
Yeah, see, India data center capacity, what we believe was around 1.3 gigawatt roughly in 2025, which is targeting to grow by 8x around 10.5 gigawatt in coming 5 years. So we believe the good amount of demand is there on the side of data center, and which is cooling, which generally pipes are required for cooling in these data centers, generally known by the name of SFN, it's secondary food network. So we are quite hopeful that good robust demand should be there in this line of business. And apart from that, we are working on other sectors also, very like solar and others. So we believe there would be a demand. Like the company expects a strong demand across several high growth and new sectors like data center, power, semiconductor, CNG station related infrastructure, and also going forward nuclear energy. So in addition to this, if you see this domestic opportunity, the company continue to focus on expanding its overseas business. So we believe with the gradual easing of these geopolitical tensions and normalization, export opportunity are expected to improve further. So if you see the combination of this incremental seamless capacity, improving utilization, and favorable shift towards higher margin product like fitting and spooling, and demand from these emerging sectors and potential recovery in overseas markets should support, we believe, both revenue growth and margin performance over the coming quarters.
Okay. So we are more or less bullish on that.
No, see, it all depends. You also need the geopolitical situation should also improve. That should help the company to grow.
Okay, got it. Understood. Thank you so much for answering the question.
Thank you. A request to all participants, please restrict your questions to 2 questions per participant. For more questions, please rejoin the queue. The next question is from the line of Kanish Gupta from SS Family Foundation. Please proceed.
Yes, very good afternoon. I want to know that we want to more or less double our revenues by Q2 of FY30, if I'm not wrong. That comes to a CAGR of around 23% versus our FY27 revenue growth target of 15%, if I'm not wrong. So we plan to grow more aggressively in the later years of FY28 and 29?
No. The revenue growth we are targeting is around 20% for FY27.
So more or less, we will achieve double our revenues by Q2 of FY30.
That's how we are proceeding. It's primarily a 20% kind of growth for coming year to you.
Okay, sir. And second question would be on what would be your internal mix that you want to achieve in terms of domestic and export revenues in the long term, and the revenues between seamless and welded?
See, again, for the export perspective, the intent is to be above 30%. The intent is that, and again, it's all depend how the order, how the markets play out, wherein sometimes the export can increase further, but the intent is to keep it more than 30% on the side of export.
And the revenue mix internal targets of seamless and welded?
See, if you see sort of near to what currently we are having, the mix is should go like that.
And sir, in the export markets where the customers have multiple sourcing options globally, so what specific advantages or differentiations lead customers to choose Venus over competing suppliers?
There are many factors which play while they choose your end customer. See, we are equipped with the entire facility of both welded and thickness. The number of SKUs what we can offer are quite in numbers. Again, with the addition of fitting, they get a forward integration also of the product which we can offer to them. Apart from that, timeliness, delivery, quality of product, which we have been doing since last few many years. So those things, the certification, qualifications, and everything help us. Everything in tandem plays to make them Venus one of the main supplier supplying in the overseas market. And again, you have a team of people in many of the geographies of the world who are senior people who know the very minor details of these products and business, who also help you a lot in getting these orders and all. And again, we participate in many of the conferences happening around the world. That also helps, where you can display your strength, your products, your technical capabilities, and others. Hello.
As there is no response, I'm taking the next question from the line of Nishita from Sapphire Capital. Please proceed.
Yes. Hello. Am I audible?
Yes.
Yeah. So I had a question. So we are doing the 70 crore capex for the spooling facility. What is going to be the total capacity for that?
See, again, these are generally sort of numbers and all. So giving a capacity number on the side of spooling will be quite difficult. But what we believe, this should at least contribute at least 3x of the capex in the form of revenue.
Okay, so the asset turn you're saying is 3x.
It should be more than 3x. Yes.
Okay. So my next question is like once we commercialize the facility in Q3 FY27, how fast can we ramp it up? Like you mentioned that from data center we can expect around 5% of revenue contribution in FY27, and I'm assuming that is coming from the spooling facility only. Is that assumption correct?
Yes, right. But primarily post start we will be really the intent is that to ramp it very fast. And again, as you said, as we already have a LOI in hand, so things are working as for those LOI and all. So we definitely believe we should be. The intent is to ramp it very fast, and the end customers stage for LOI is also wanted to move it fast. So I think they should help us to take the desired number what we are expecting.
Right. And now my last question is, in FY28, can we expect the margins to improve further because the spooling facility will also have the full effect for the whole year?
Yeah, definitely. As we said, the combination of incremental seamless capacity, improving utilization, a favorable shift towards high margin product like fitting and spooling, demand from emerging sector, and potential recovery in overseas market should definitely support both revenue and margin, we believe, for the company.
Okay. Understood. Yeah. Thank you so much.
Thank you.
Thank you. The next question is from the line of Asim from DAM Capital. Please proceed.
Yeah, hi, good evening. Just one question. So on this revenue target that you just talked about, 20% for FY27, can you just break that growth between seamless, welded, and fittings? How would each of these segments broadly grow for the entire fiscal FY27?
Can you repeat?
So in your revenue target that you just talked about, 20% revenue growth you are aiming for in FY27, what would the growth be for welded, seamless pipes, and for fittings separately?
The growth would be basically in a growth percentage we are targeting from both welded and seamless will be around 20% in both the cases what we are targeting currently. And from the fittings fitting and spooling, see, as we said, it should be at least 5% from fitting, which should contribute to this top line for FY27.
I think approximately for the year, steel prices probably are higher by at least 5-6% on average. Then is it fair to assume that the volume growth for this year would be 10 to 15% at best?
No, if I take fitting, spooling, seamless, welded all together, we believe we should be higher than 15% on the volume front also.
Spooling will not be much in this.
No, but again, I think some part of fitting and spooling will definitely come. So definitely it will contribute in some quantity also on the quantity level.
How much would fittings be on quantity level approximately? Just to get some sense.
Very, it will be very currently very
less, right? Okay. Okay, fine. Thanks a lot. That's the only question I had.
Thank you. The next question is from the line of Mahek Talati from Agility Advisors. Please proceed.
Yeah, hi sir. Thank you so much for the opportunity. Am I audible?
Yes, a bit low.
Yeah. Just a second.
Mr. Talati, can you please speak little loudly?
Yeah, am I audible now?
Yes.
Yeah, much better.
So, so just wanted to understand, you mentioned that in the data center spooling, we have a 185 CR of LOI. So is there a possibility of this going further? Like we can get more orders here, or this is the highest order we can get?
No, see, it's very common to, once you are established and you get an approval and all, so definitely we as a company believe we should definitely have more orders from data center coming in a way. But once you start your facility, a few demonstration has been done to the end customer, it definitely help you a lot in getting few more orders. So definitely we are working towards that only.
Okay. And so are there any more customers with whom we are having chat or inquiries for regarding the DC spooling orders, or that will come only after the capacity is online?
See, it's very common again to, as a company, keep on working with a few more customers in the spooling line also. But we mean to say when you had your facility in place, when you start supplying, so it add more push towards the end customer to place an order with us. But definitely, yes, we are working with few other also.
Understood. And sir, when can we expect a pickup in the export revenue? We have seen a good degrowth in this quarter. So is growth online from Q2 onward, or it will take some more time?
The intent is to do it in Q2, but again, we all know that there are geopolitical and container issue in this quarter, Q2 primarily. So might be a few pickup might be there, but definitely Q3 forward it seems to be more good from the export perspective.
Understood. And sir, does export have a higher margin as compared to domestic, or because of the increase in freight cost and power cost, overall margins have taken a slight hit this quarter?
Generally, when you are established in the export market, you tend to earn a slightly higher margin. But again, few domestic orders are also there where you can chip in and get a good amount of, you can get a similar margin or sometimes incremental margin. So those all depend on case-to-case basis.
Okay. And in the 600 crore order book, what is the split between export and domestic?
More than 40% is export.
Okay, understood. Thank you.
Thank you. The next question is from the line of Nikhil Chaudhary from Toro Wealth Management. Please proceed.
Yeah, hi. Arunji, thank you for the opportunity. I had just one question. This EU has significantly probably reduced the safeguard quota for seamless steel tubes and pipes. And beyond the quota, there is a duty of 50%. I'm just trying to understand, is the export revenue decline attributable to that, or was it just geopolitical? And how are we planning to navigate such kind of quotas implemented in the EU?
This is mainly due to geopolitical only. The quota has been reduced by 25% only for the Europe, Otherwise, previously also, when the quota was complete, approximately 6,000 metric ton, the export from India was going more than that. So if they require anything seamless pipe, so India is best source of supply for them. So this was due to geopolitical only.
Got it. But is it impact? I'm sure, like you said, that India was exporting more than the quota, so it will definitely impact players like us?
No, I don't think so. We are exporting. We are the Venus has a number of geography apart from the Europe, USA, Middle East, in the Southeast Asia also we are creating our presence. We are our marketing every place else. So according to our requirement also, domestic demand, export demand, every place demand. We also sometimes we used to say no for the order also when we had the not much capacity available for that one. So recently we did the good capacity expansion in seamless pipe segment. So after that, you will definitely this year, you will see in the growth in the export revenue.
Got it. Understood. And just one more follow-on with respect to the spooling order that we have won. The solution that we will be offering, does it flow down from the CDU or what is the product utility in the data center? Like, is it around the building or will it be flowing down the CDU?
Yeah, it is in the building. It is the product name is the SFN, Secondary Fluid Network, in the data center. So it's inside the building.
Got it. So from the CDU to the rack, if I understand.
Yeah.
Yes.
Got it. Thank you so much. I'll come back in the queue.
Thank you. The next question is from the line of Dhananjay Bargodia from Alchemy. Please proceed.
Hi, Kunal. Thank you so much for this. Can you hear me?
Yeah, we can hear you.
So just Kunal, most of my questions are answered. Just wanted to understand about competitive intensity. Are we seeing like competition increase when we're reaching out for orders, undercutting, anything along those lines?
See, few people are coming in this business, but again, as we have said, the intent of our diversifying to number of geographies, number of product and number of world market, we should be able to keep apart from this type of competition. And again, addition of these few products like forward integration to fitting and spooling, so this will definitely give us an edge to withstand those if something is there more.
But like, let's say in spooling, now we have another player which is also increasing capacity. How long will it take for us to get approved by customers for spooling?
We believe it's for new customers you ask me?
No, let's say even your existing customers who use a pipe, if we go to them with spooling, wouldn't they also take time to assess a product?
Definitely. But again, from each one has their own way of approving. It can take a few months. It can be slightly at a faster pace also. But as we said, as and when we start executing this current LOI, it definitely will give the utmost amount of confidence to many of the customers in the country and also abroad. So I think that will give a good amount of push to the end customer. They have been supplying the requisite technical capability required for those spooling business. So I think that will really drive the future spooling business and all.
Okay, fine. So, and in the current pipe business, are we seeing, just to understand, are we seeing a lot of undercutting, or just to understand how is the competition behaving?
Yeah, big competition is there, but not as such major. Yeah.
Okay, fine. Thank you.
Thank you.
Thank you. The next question is from the line of Divyansh Thakur from Finterest Capital. Please proceed. Are you there, Mr. Thakur?
Hello, sir. Yeah, I'm sir, am I audible?
Okay. Yeah.
Sir, actually, I was not able to get the answer of, what is our utilization levels in the seamless segment and the welded segment. You can just clarify on that one.
Yeah, more than around 60% on welded and around 90% for seamless.
Sir, but also just to adding on that part that, we have seen our capacity ramping up for the seamless pipes usually contributes around 60% to the revenue. But even after the ramp up as the utilization with the new capacity, we haven't seen much of the top line growth.
The new capacity, major of the new capacity has started by end of May 2026. So definitely we will be able to see in the coming quarter to grow.
Okay, so going ahead, do we expect the margins to pick up, sustain, or like how do we see it?
The intent is there to get it increased, but again, it's a mixed bag of contribution coming from welded, seamless, and other products. But again, when you add fitting and spooling, those started contributing, definitely the margins will pick from that.
Okay, sir, and any guidance on the margin and for this year, margin side this year?
For coming 2 years to go, we are targeting of around 80%, which will keep on increasing. In each quarter, you can say a big portion. The intent is that.
Okay, sir. So we remain on track for 18% margin till FY28. Yeah.
Yes.
Okay. Thank you. Thank you so much, sir, for answering and all the best.
Thank you.
Thank you. The next question is from the line of Simran Kumari from Narnolia Financial Services. Please proceed.
Hello, sir. Good afternoon. I have 2 questions. The first one is related to volume growth. Like, what was the volume growth during this quarter and for FY27 as well as FY28? And additionally, could you just share the specific volume and realization figures for both welded as well?
No. We are not giving as such those breakup, but on the year-on-year quarter, there is a growth of more than 7% on a blended basis. And
can you just share the volume growth for this quarter?
No, it's more than 7% on a blended basis. And targets we are given to for each year, the revenue guidance is more than 20% in coming 2 years to go.
Okay. And what will be the capacity utilization trajectory for both welded and seamless for FY27 and FY28?
It will definitely be increasing on the side of seamless. It should be we are targeting more than 80-85% for both the years, and on the side of welded, it will be exceeding 60-65%.
Okay. Thank you, sir.
Thank you.